In the previous video, I showed you exactly how I draw uptrends and identify that a market is actually trending upwards. So what we're going to do now, we're going to do exactly the adverse effect, and I'm going to show you how I draw downtrends. So you can see, just to quickly recap on the last video, that we've had not particularly a bounce off the exact wicks, but we've got an overall direction that the market is actually channeling in. And we're going to be looking to do exactly the same on the top. So at the moment, I'm roughly going to start working my way back with a trend line just to see how much data I can actually capture. So in this condition here, I'm going to zone right out. And I can see that, all right, we've cut a bit of the price off, but I think it's because this current price at the moment may have not raised high enough. So what I'm looking for is just to get a rough price where I'm covering as much data as possible. So we can see that the bottom of these wicks have actually touched. It's guided the price all the way down. And now we've continued in this sort of pennant forming channel that we're currently in. So that is pretty much how I would draw the downtrend. It's on the tops of the swings, but it's exactly opposite to what we do on an uptrend. So what I'm going to do, I'm going to try and identify another downtrend, which we've got here. We can see that the wicks are all running in a certain direction. So I'm only going to loosely draw a line through them. Let me just try and squash the chart up a little bit, just so the scale's a bit better as I'm showing you. So here we can see that we've got a higher high, we've got a lower high, a lower high, a lower high, and we can see that the lows are we're actually getting lower lows as well. And that's the important thing when you're drawing trends, that you want to make sure that when you draw trends, that the market is actually in a downtrend. You're getting the higher highs are getting lower. So then this would be a lower high, and then a lower high, and then your lows, you want to be making sure you're getting a lower low, and then here we're getting a lower low, and then obviously if it retraces, we're getting a lower low. So it's like walking downstairs. No matter how much the market retraces, you're always getting lower highs and lower lows. So in an uptrend, as we covered on the previous video, you'd be getting the momentum exactly the opposite direction. So these are what we would call higher lows, right? You'd get a higher low here, and you'd get a higher low here. And obviously these, we know that the highs of the swings are getting higher, higher highs, and higher highs. So it's a really, really simple way to identify a trend. So what we're going to do, I'm just going to try and make sure that this fits in the best possible way. So what I'm going to do, I might even start on this one here because it looks like it's trending better. And you can see that the market cyclicity is exactly doing what we want it to do. We're getting our lower highs, okay? And it's just going down. We're getting our lower lows, which is identified. I did try and make it fit on this, but this one here looks like this may be the transition period. So the ranging section. So we've probably got a really nice uptrend. We've got a sideways transition, and now we've got the downtrend. So just beware. My rules are I don't try and make it touch, so it's perfect on the wicks or the top of the candles. I just literally have my line going with flow. So as long as your line is flowing with the directional trend, that is a good enough trend line. So in the next video, I'm just going to quickly cover ranging market.